Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Today, we explore sweeping regulatory shifts in the United States and the United Kingdom, alongside landmark bond and equity offerings fueling large-scale Bitcoin accumulation and growing optimism for spot altcoin exchange-traded funds. We also examine Solana's 8% surge, portfolio pivots such as 2Prime abandoning Ethereum, and the emerging role of artificial intelligence-driven automation in finance. Now let's get into the details on May 1st, 2025 at the AI Summit during Consensus Shore. Walters of Eliza Labs forecast that artificial intelligence agents and humanoid robots will automate all jobs, thereby freeing people to focus on investing, rather than labor. He argued that society will look back on wage labor as an outdated relic. On May 2, 2025, Tokyo-based Metaplanet issued 3.6 billion yen in zero-interest bonds to acquire more Bitcoin, pushing its holdings beyond 5,000 coins with redemption, at par by October 31, 2025, funded through stock acquisition rights. Metaplanet shares rose in response, reflecting market approval. The United States Treasury Department's Financial Crimes Enforcement Network proposed cutting off Cambodia's Huioni Group from the American financial system for allegedly laundering $4 billion of illicit proceeds linked to North Korean hackers and cybercrime syndicates under Section 311 of the USA Patriot Act. Solana rallied 8% to $151 amid global trade tensions, while trading volume jumped 35% over 24 hours. Analysts now assign 75% odds for spot Solana XRP and Dogecoin exchange traded funds by 2025, with investors chasing gains like Pac-Man chasing dots. Strategy led by Michael Saylor plans to raise $21 billion through an at-the-market equity offering after recording a $5.9 billion write-down on its Bitcoin holdings. The company will add to its 553,555 coin treasury to pursue a 25% yield target. Algorithmic trading firm 2Prime fully exited Ethereum, labeling it a meme coin with unpredictable momentum and network fees akin to a novelty token. The firm will now focus solely on Bitcoin, citing its liquidity predictability and growing institutional demand as foundations for a stable asset allocation. The US Senate fast-tracked the Genius Act stablecoin bill, seeking a vote before Memorial Day, while the UK Financial Conduct Authority opened a discussion paper on crypto lending, staking borrowing and decentralized finance to craft a balanced regime, promoting innovation and consumer protection before 2026. Crypto investment firm DAO5 closed a $222 million fund to back institutional blockchain adoption across stablecoin infrastructure, public on-chain data networks, and state-governed systems. The firm plans to transition into a decentralized autonomous organization later in the year to align governance with community stakeholders. Kraken reported first-quarter revenue of $472 million, up 19%, and a 29% rise in trading volume after completing its NinjaTrader acquisition to enhance derivatives capabilities. The exchange also plans to launch crypto debit cards with MasterCard and expand proof of reserves transparency. Tether posted over $1 billion of profit for first quarter 2025, despite a decline in Bitcoin yield, and holds nearly $120 billion in US Treasuries, along with 5% of its reserves in Bitcoin as it pursues a full audit with major accounting firms. Glassnode on-chain data show Bitcoin metrics such as MVRV SOPR and the sell-side risk ratio have stabilized at historical norms, indicating reduced speculative froth as prices consolidate in the $95,000 to $100,000 range, laying groundwork for a potential breakout. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.